Will we have to cop a double-dip recession headline today? Should you dump mining stocks or maybe buy more? And Wall Street has knocked over 7 months in a row. Can they make it 8? I'm Peter Switzer, he's Paul Rickard, and we're mad about money. Okay, Paul, I know you always say you don't really trust economists anyway, you don't pretend to be an economist, but you do know what the effects might be if we see double-dip recession headlines in newspapers and websites tomorrow. Wouldn't be good.
It wouldn't be good, Peter. I'm not an economist, and you know what I think of economists, right? So, but I won't go there just at the moment. But look, I'm sure if we get a negative outcome today, the papers will be spooking us about double-dip recessions and the rest of it. I think the market's probably assuming that we're going to get a slightly positive number, Peter, about 0.3, 0.4. I'm going to tip that too, Peter. So there's my economic guess.
Yes, it's like you on Melbourne Cup Day. You're always an expert on Melbourne Cup Day, I've noticed. And you're not bad at picking the winner, I've got to say. But Paul, I think, well, I'm just hoping, like you, for a 0.3, 0.4 number. We know September will be a really crappy number because lockdowns will do that. But if we can avoid that headline, one of the headlines I want to put out there is, like, I interviewed only yesterday Shane Oliver, and Shane was a guy who actually said that it could be negative last week, and double dip story started coming out last week. He actually has now switched to the positive. He's looked at the most recent data, and that's been good. Exports have been good. Government spending's been pretty good as well. So he's expecting a small positive. But he also thinks 2022, next year, will be a 6% growth year. That will be enormous, and I think it will power the stock market with growth like that.
Yeah, I mean, I think the contribution from net exports, Peter, I mean, look, the resources markets, despite the price falls, are still booming. I'd be tipping a bigger number than expected there. So let's hope we don't have the scary headlines tomorrow. Consumer confidence, we want confidence to be high. We want better markets. So we don't need the ABC and all the people on the left telling us that the world's about to end again.
Stop picking on the ABC, Paul. Stop picking on the ABC. Next one. Should you dump mining stocks or buy more? Paul, what do you reckon?
Look, they've had a good pullback, Peter. I was looking at the chart yesterday of BHP. It actually looks like a bit like almost like a double top. You could argue double bottom. I think there's still more in the resource stocks. I haven't met anybody who's consistently good at picking commodity prices. And so when you get a pullback, we all knew $230 was too high. No one quite knows whether it's around 150 or around 100 long term. But look, the analysts and the companies seem pretty positive still. They're certainly factored in a lot lower numbers for next year in terms of the average iron ore price. And look, I think there's probably a bit of value left, Peter. When you get the market, BHP was up near 55, back near 45. It'll go X, it's $2.75 dividend. Look, it's going to be in the low 40s, and there'll be some value there. So I think if you aren't in the resources stocks, there's going to be value to be had in the next couple of weeks.
And I've got to say, Paul, I looked at the Macquarie review on BHP. Oh, they're predicting a pretty big rise in the share price for BHP over the next 6 months to a year. And they weren't alone. I think UBS or one of those other organisations, or maybe Ord Minnett, were very supportive that BHP share price can head in the right direction. And also remember, there's two parts to revenue. One is the price you get, but also how much you actually dig up and sell. And if 2022 is a strong rebound year, because China's gone off the boil a bit this year, they could regrow harder next year with, markets opening up, supply chains being better. Who knows? There could be a lot more revenue going to the miners, and that would justify a higher share price.
Yeah, I mean, you remember there's two fundamental drivers behind why commodity prices are high. One is, we've got a recovery in growth, which is the main driver. That's why they've all gone up. But secondly, over the, not so much the last few months, but over the last couple of years, a weakening US dollar. And that's helped commodity prices go up as well, because they're all denominated in US dollars. So look, I think there's still more upside. I certainly think you play it at sort of market weight level. Probably not the time to go overboard, but if you've missed it, I think this is going to be some good opportunities too.
Become an annual Switzer Report subscriber and get unprecedented access to my 7 investing principles, where I reveal the exact strategies I use to invest. You'll get access to an exclusive PDF, video recording, and even a free copy of my book, Join the Rich Club. With a 30-day money-back guarantee, a Switzer Report subscription is one of the wisest investments you can make towards your future. Find out more at switzerreport.com.au/YouTube offer, or click on the link in the description below. Okay, finally, Paul, Wall Street has knocked over 7 months in a row. Can they make it 8?
Well, it's an amazing story on Wall Street. It's been an amazing story in Australia too, Peter, but not quite as strong. I think we're up the Australian market year to date about 14.2%. You add in dividends, and it's a return of exactly 17%. The US is even better than that. We've arguably underperformed compared to the United States. Have been doing that now for some time. I don't know, maybe it's time for a bit of scary September. A bit more story around there's something getting worried about COVID. I don't know. Look, they're the Yanks, they're optimists. Interest rates are staying low. We might get a bit of a tapering later in the year. Maybe inflation will go a bit higher, but you know, you've got to say that the momentum of the market is still higher. So if you're a betting person, I guess you say Wall Street goes higher still.
Yeah, I wouldn't be surprised to see a bit of a sell-off in September, particularly if the job numbers on Friday are really, really big. They'll start making people say, oh, the tapering will start in September rather than December. And so that might cause a bit of a sell-off. But I'd be a buyer, Paul. I'd be a buyer for sure, because I think, you know, if you look at where America was before, the American stock market was before the crash for the coronavirus, they're actually up 34%. That's a big number. We're only up about 5%. So I'm saying even if America sells off, they'll buy again into a strong 2022 economy. But I think in 2022 we'll go up faster than the Yanks because we have a lot more room to move. And also cyclical stocks tend to do well in this part of the cycle. And they drive energy and they drive financials. And I think, you know, financials are very important to our stock market. So all looking good. Sell-off possibility, I'd be a buyer into any sell-off. I'm Peter Switzer, and he's Paul Rickard, and we're mad about money.